Financial Pathway. This is episode 5, the final episode in our series, and today we're going to be talking about giving, ways to be generous with our resources. And in today's episode, we'll discuss tips on how to reduce your taxes while you're giving. And so there's some great insights and some practical things you can do to lower your tax burden while you give to charities, churches, and causes you care about. We'll also be talking about how you can strategically plan your giving. For instance, you can give today, later on in the future, and even when you pass away through your estate plan. We'll talk about creating a smart plan for doing that. I am Brandon Hovey, and I'm joined today by my colleague, Tim Hedberg, and we are privileged to be joined by a special guest, Erik Carlson, all the way from Minnesota. He is a financial services representative for Covenant Trust, and he has a certification in financial planning and a deep understanding of our topic today. So Erik, thank you for joining us.
Thanks for having me, guys. Excited to be here.
Well, as we get started, a quick review of the financial pathway. If you remember, the financial pathway really starts with identifying what are our values, what are those core commitments, the things we believe in that we really care about, how do we flesh those out, identify them, and then create plans that align with our values around our spending habits, our investments, our retirement plan, and then our giving, which we're going to talk about today. We want our values, our purpose, our mission, and our call to really drive and guide these core areas of our life. And then we want to reflect on these plans and monitor them as we move on in the future. And so today we're excited to explore this last topic of creating a giving plan.
Yeah, thanks, Brandon. So as we talk about giving today and being generous with our resources, as Brandon said, there are ways to do it that could be beneficial to you as well as to the charities that you want to give to. So let's take a look at this next slide. You'll notice the chicken and the pig. Giving for the chicken is, well, quite easy, but giving for the pig is quite costly. For some of us, we're reluctant to give. We want to hoard. We want to stockpile like the man in the picture, while others of us find it quite easy to give what we have been blessed with. And if you're a person of faith, then you're invited to participate in God's generosity by giving part of what you have to causes or organizations that align with your purpose, mission, and call. In Proverbs, we read this verse: "Give freely and become more wealthy. Be stingy and lose everything. The generous will prosper. Those who refresh others will themselves be refreshed." One of the joys of this role that I have at Covenant Trust is for me to witness the truth of this verse. Throughout the year, I have a front row seat on the generosity of many people. I get to see how they find great joy in giving what God has entrusted to them away to others. God does indeed bless them as they follow his own example of being generous to others. So Erik, as you work with people who are interested in giving, how do you begin that conversation with them?
That's a great question. So at the beginning of the conversation of being generosity, I think the most important question to consider is your why. You want to ask the question, why are you giving, or why do you want to be generous to an organization? Because giving and generosity is not generally something that you do for a tax write-off. We can't let tax strategies or the other benefits be the driving factor. Those are not going to lead someone to actually follow through on their plan. If they want to do it that way, they're going to have to find a purpose and a reason, because people give to causes. People give to missions and organizations that matter to them. So if you haven't taken the time to consider that question, that's where we're going to focus our efforts on early on in the conversation. Now, a lot of people already know their why, and once you have established what your why is, it's up to us, the representatives of Covenant Trust, the advisors to people who are trying to help them be wise with their money, to tell them the tools of how. There's a lot of ways to make charitable donations, and I like to think of them in categories of when those gifts are made. So giving today, giving at a later point, so giving tomorrow, and then giving once you've passed away, which is something that people will sometimes refer to as a legacy gift. So giving today, giving tomorrow, and giving at death.
Erik, let's talk a little bit more about these three categories you just mentioned. I think for many of us, when we think about giving, we have kind of a short-term focus. We think about maybe the extra money we have now that we can give away to others or to causes that we care about, or maybe later this year for a tax write-off, that kind of thing. But as you mentioned, it's not just giving today. There's also giving tomorrow. And there's also giving at death. And on the screen here are different ways that we can give under each of these categories, and we'll go through them in turn. But I want to start out by talking about ways we can give today. So what are a few ways that people can give today?
Sure. The simplest way to give money today is to just write a check, to give a cash gift to an organization. So it's very simple. You write a check, you give them money, you give cash, you drop money in the Salvation Army, tea kettle. You write a check off to your favorite organization, and it's a very simple way to make a donation. And I'd say that's the pro side of that. It's simple and easy. The drawback for some people, especially under current tax law that is here in the year 2020, post the Tax Cut and Jobs Act of 2018 or of 2017 that went into effect in 2018, not everyone is able to take charitable deductions in every single year because the standard deduction is higher. And that's getting a little bit into the weeds, but I'm just saying that there's some limitations on how people are able to deduct their charitable giving. And so that's leading into another conversation or another thing that we can do to make charitable gifts, and that is to donate assets. So donate stock, donate some mutual funds, some other investments that you might have. Most commonly, people use stock or mutual funds. When a person sells your investment, so if you have stock in a company like 3M or Apple, you pay capital gains tax on the difference between the price you bought that stock at and the price you sell it at. But when you transfer it or donate it to a charity, you get a tax deduction for the value of that stock the day that you transfer it to the charity. So if Apple's shares are trading at $115 a share, you get to write up, that's the value that is used to determine the value of your gift. And you also avoid paying capital gains tax on the difference between that and the purchase price. So there's a twofold charitable benefit or tax benefit in donating stock as opposed to writing a check. Another way that people can give today that I think for anyone who is over the age of 70 and a half is one of the best ways you can donate is you can actually transfer money directly from your retirement account, your individual retirement account, by a process called a qualified charitable distribution. So you don't pay taxes on the withdrawal of the IRA. And if you are normally subject to taking minimum distributions because you're over the age of 72, this charitable gift actually satisfies that requirement. So you're using pre-tax dollars to make a charitable gift. So the money goes directly from your retirement account, your IRA, to the charity that you have in mind. And the only limitations are that it has to come out of an individual retirement account. It can't come from a workplace plan. And the other limitation is you can only do $100,000 a year per person from your IRA. So there's definitely a lot of room to be very generous today using this process. And for someone who is in that age range of in their 70s or older, it's a great tool for them to achieve their charitable goals.
Well, thank you very much, Erik. I also want to make the listener aware, going back to stock donations, that if you would like to make a stock donation to any entity of the Evangelical Covenant Church, it could be your local church, it could be an organization like Covenant World Relief, or any other one, we would be happy to assist you with that cost-free. So there's no fee for you and no fee for the organization that receives the gift. Also, Covenant Trust specializes in charitable distributions from IRAs. And so we do hundreds and hundreds of these every single year. We send out unlimited gifts for people who have their IRAs with us. And if you would like that service, you can transfer your IRA or roll over your 401k, and we'd be happy to talk to you and set up a plan for giving from your IRA in a consistent and smart way every single year. Well, let's shift to talking about giving in the future, Erik. What are some ways people can do that?
Yeah, so when we think about giving tomorrow versus giving today, I think the easiest way to do that is through a vehicle called a donor advised fund. It's a really flexible charitable tool. And what it is it's an account that is nestled within a charity, and you donate money to that charity, and they put it aside in a fund where you get to then advise on distributions from that fund. So looking at the slide, it begins, you donate cash or stock to this account. And in return for donating that money or the stock, you receive an immediate tax deduction. You also avoid capital gains on any of the stock that you donate. And then later or right away, you get to make grants over time. That is, you get to advise on how that money is used and what charities ultimately get to use that money. So over time, you get to tell the charity that the donor advised fund is with which other charities you want to support, and you can instruct them over time to do that. And what's really cool is, there's all this flexibility while you're living. And actually, after you pass away, you have the ability to continue making gifts to public charities after you pass away. You also can name your kids or someone else as an advisor on the fund, either while you're living or after you pass away, and give them the opportunity to have input into how those funds are used, or you can just make a distribution of what's left in it after you pass away. But the really powerful thing about this, in addition to teaching charitable giving to the next generation, in addition to the ability to make donations over time, is you get the tax deduction for the full donation in the year you make the donation, but you don't have to give the money ultimately to the end charities in that same year. And so it allows you the flexibility of taking the tax deduction when you need a tax deduction and making charitable gifts when you maybe don't need the tax deduction part of giving. And so there's some really cool features of a donor advised fund.
Thank you, Erik. That's quite good and quite helpful for people that want to take advantage of the tax opportunities in the current year and give it out over multiple years. Thanks. Erik, how about giving at death? Ways people can give after they've passed away.
Sure. I think the most common way that people think of giving after death is you can name a charity as a beneficiary in your will or in your trust. You can do a certain dollar amount or even a percentage of what you have left. You also can name a charity as a partial or full beneficiary of a retirement account and a new life insurance. In fact, you can name a charity as a partial beneficiary if you have some that you do not have. You're able to name a charity instead of an individual, or in addition to individuals there as well. In fact, I would say a retirement account is a great tool for this, because retirement accounts are pre-tax, meaning if you leave that money to a person like your a relative or an individual, they ultimately have to pay income taxes on any distributions from those retirement accounts, whereas the charity, being a nonprofit organization, does not need to pay any income taxes on those distributions. So it really is a win-win for you and the charity.
Yeah, thanks, Erik. And then there's some kind of hybrid ways, if you will, charitable gift annuities and charitable remainder trusts that allow you to give now, but also reap benefits while you're alive and then after you've passed away. Can you explain these?
Yeah. So with a gift annuity, you make a donation of cash or stock to a charity. In return, you receive income for the rest of your life. And usually they're equal payments from that gift annuity. And those payments are based on how old you are when you make the donation. And then when you pass away, whatever's left in that fund or in the pot of money that was used to fund, the annuity payments back to you, is left for the charity to use. With a charitable remainder trust, you establish a trust that receives cash or stock. In return, you receive payments for life, and the remainder in that trust goes to one or more charities upon your death. Both of these are great vehicles for someone who really has a goal of leaving money to charities, but is maybe concerned about running out of money later on in life, or maybe wants to still have some supplemental income in their later years. There's also some really cool opportunities with retirement accounts and leaving money to a beneficiary and leaving them in one of these sort of arrangements. But that is, I think, beyond the scope of our talk today. But these are really cool hybrid giving vehicles that for the right person can make a whole lot of sense. But I think just one thing I want to mention is that with these and with any of the charitable plans that we've talked about today, I think it's really important that you talk to a trusted advisor about what your goals are and what makes most sense for your situation, because one of these may seem really appealing to you, but depending on what your stated goals are and what your situation is, it really impacts which one of these tools makes the most sense for you.
Great. Well, thank you very much for joining us, Erik, and providing some insights into ways we can give today, tomorrow, and in the future. Giving us a lot to think about. As we wrap up, in terms of next steps, one possible next step would be to reflect on the why and the what of giving. Is there a cause or mission that inspires you, something that hits home in a personal way and aligns with your faith and values? As Erik discussed earlier, this is the place to start as we are planning our giving to reflect on the why question. Second, look for tax advantage ways to give. Consider giving now from your IRA, donating stocks, or writing a check, and consider giving later by opening a donor-advised fund or a charitable remainder trust. As Erik mentioned, the exact giving mechanism for you will depend on your situation. And if you'd like to discuss that with a financial services representative, you can go to our website, covenanttrust.com, and look at the different financial service representatives we have all over the country. We'd be happy to set up a phone call with you and discuss the options. Finally, you can give out of your estate plan. Consider leaving a charitable gift out of your IRA beneficiary designation, your last will, or from a revocable trust. And we'd be happy to talk to you about those as well. So thank you very much for joining us today. If you'd like to learn more, go to covenanttrust.com, and please remember to subscribe to our YouTube channel and follow us on Facebook. Thanks and have a great day.